We have Webster Tarpley as an author, historian, journalist, lecturer. He's a doctor of history, a critic of the U.S. Foreign domestic policy, best known for his book, George Bush, The Unauthorized Biography. This is an old bio. He's now known for all the seminal works on Obama that have really borne out to be dangerously accurate. I read these books, even though I respect Tarpley, like 2 years ago. And a year I was like, it's just all real. It's all true. This is so insane. Mr. Tarpley is a 9/11 truth scholar who's documented the September 11th as a synthetic staged event. And we really appreciate him coming on. He's also a Genesis talk show host Saturday afternoons with World Crisis Radio, and his website is tarpley.net, TARPLEY.net. He joins us from Maryland, right outside the District of Criminals in Washington, D.C. Webster, good to have you here with us.
Hey, congratulations, Alex.
Well, thank you. I mean, we've raised about $335,000, but with 20 crew members and the huge, facility we're trying to finish, and all the websites and the bandwidth, just giving out in the last 24 hours or so, the free video stream for people to watch is going to be probably $10,000 with the hundreds of thousands that have tuned in on it. And I mean, it's so obvious, and I want to get into all the news and the economy with you, but it's so just blaringly clear and evident and self-evident that we're not funded by the globalists and the New World Order and the Wall Street criminals and the zombie banks. We're funded and supported by you, the listeners. And InfoWars, Moneybomb.com, it's so important. Webster, I mean, do you think this is a worthwhile show and platform for people to support?
You're performing a very important public service, right? There's got to be an opposition to all of these terrible things that are going on. So somebody's got to speak up against it. And we don't have enough platforms for opposition, so every one that we have is precious, and yours is a very important one. So more power to you.
Well, thank you, Webster. I hope people will continue to donate. We want to thank them. 888-253-3139. Our great crew is here to take your donation via credit card or however you'd like. 888-253-3139. Don't sit on the bench, folks. Get involved. I mean, this is like war bonds to restore our republic and our system and the American system that you talk so much about, but we don't make you give us the money at the barrel of a government gun. We're asking you to help us. So if you choose to join us and believe in what we're doing, 888-253-3139, 888-253-3139, or InfoWarsMoneyBomb.com. Webster, so much is happening in the world. Everything you talked about, that's the guests we have on, people that are accurate, people that have charted what's happening. I mean, you talked about the derivatives a decade ago with the end of Glass-Steagall, or 11 years ago. You talked about the zombie banks. You talked about the mortgage crisis just being the beginning. You talked about the derivatives, selling them, sometimes 10, 20 times. Now the mortgages being halted in many cases, total systemic fraud. I mean, break it all down. First, the crimes we're dealing with, what is going to unfold. We already aired an hour-long video of you going through solutions. We wanted to interview you about eugenics, but you demanded to get into, we talked to you in D.C. About solutions. So that's already been heard earlier. Get into, so people understand the full magnitude of the corruption, the devaluation, the G20 announcement last year that was horrifying to us, that they are going to have concerted, coordinated currency devaluation. They're calling it a currency war. Is it really a currency war? They're announcing their world government that's to come out of it. Webster, break it down.
Well, the currency war really started about a year ago, and it ultimately goes back to the banking panic, the world derivatives and banking panic of September 2008, right, when all the Wall Street banks were bankrupt and were then bailed out by Bush and Paulson, and then by Obama, Bernanke, and Geithner. The response of the authorities to this derivatives panic of September 2008 was to flood the system with money, right, liquidity, and that was the 24 trillion that we've traced, you've traced.
But they flooded it to themselves.
Sure, but the problem with this was that this then started to weaken the dollar, and all during 2009, the dollar was going down, and this became an issue in the summer of 2009. By about August, there were a lot of people very nervous. When is this dollar slide going to stop? So what they decided to do was to export the depression. In other words, the U.S. and the British, as usual, decided to pursue a beggar my neighbor policy, and the idea was two things. Export the depression, first of all, to Europe, smash the euro, do a speculative attack on the euro, get Soros going, use credit default swaps, attack Greece, Spain, Portugal, use that weak flank to break into the eurozone and then create mayhem, break it up and then loot it and sack it and then go on to something else. So that was one side. The other side was drive the Chinese currency up, up, up. The renminbi goes into the stratosphere, creating tremendous social tensions, and maybe with luck you could get a color revolution going in China and eliminate what I think they regard as a serious competitor and an adversary in the long run. So again, euro smashed and down, and renminbi up. Now neither one of those has worked, and this became obvious by the early part of May. If you go back to that flash crash of May 6th, remember when the Dow lost 1,000 points in about 10 minutes, right? 1 trillion of so-called paper wealth destroyed. My view on that is that was an attempt to use program trading to smash the euro. And in particular, if you look at the quotations of the yen against the euro in the flash crash, you'll see that the euro was going down, down, down against the yen, and that part was working, except what they found was that as they did that, they were also destroying the New York stock market, which they couldn't continue to do because of the political implications of it. So they had to cease and desist on that front. So that was the flash crash, I think. It was an attack on the euro that misfired, that boomeranged and threatened to drag down the entire system in a general panic. By the way, after that point, after the flash crash, anybody who proposes investing Social Security money in the stock market, I think, is a certifiable lunatic. But that's just by the by. Now, the problem then is, at that point, what happened to the Anglo-American strategy, right? They were going from November to May, June, trying to destroy the euro, and it didn't work. Now, the forces of depression are still there. The forces of depression are 1.5 quadrillion. That means 1,500 trillion dollars of kited, toxic, bankrupt derivatives, right? The collateralized debt obligations, credit default swaps, structured investment vehicles. Generally, the over-the-counter derivatives are the worst part, although the exchange-traded are also bad. That is sitting there, right, in the New York banks, to some extent in London. So how is that going to express itself? Well, it's sitting there, and it has now taken the form of a dollar crisis once again. And at this point, we have to look at our friend Helicopter Ben Bernanke at the Fed, and his policy is now QE2, quantitative easing Mark II, meaning flood the system with liquidity again. Buy $1 trillion or a couple of $1 trillion worth of bonds and securities and try to get more money sloshing around. Really, all that means is more hot money that will then go into the emerging markets or some speculative market in a foreign country and try to get short-term speculative profits with gambling and so on. The problem for the U.S. is that as the dollar goes down, the Chinese come with it. In other words, the Chinese have locked their renminbi onto the dollar, so that when the dollar goes down, the Chinese renminbi goes down with it compared to other currencies in the world. And since China is now the world's largest exporter, that puts the pressure on Japan, on South Korea, on really everybody, Philippines, Indonesia, India. They're all screaming that the Chinese are undercutting them in the export markets because the Chinese currency is getting cheaper as the dollar goes down. So that set the stage for the meeting of the International Monetary Fund this past weekend, which was preceded by a huge array of China bashing by the heads of the IMF and the World Bank and Tiny Tim Geithner here at the Treasury and so forth. But what has come out of this now is that there's a split in the G20. The G20 will now meet in South Korea next month, but there's a big division in them, right? They don't agree, and that's they tried to agree in September 2008, but now they don't agree anymore. And what you've got is a tendency towards protectionism. In other words, the free trade people that have created this crisis with their deregulation and so forth policies, they are now on the defensive, because what's coming is capital controls and exchange controls. In other words, that countries have the right to limit the amount of speculative hot money that comes into them. For example, Brazil. Brazil says, wait a minute, all this speculative hot money is coming into our currency. You're driving us up 10%, 20%. That means our export companies go bankrupt. We're going to stop it. We're going to find ways to tax it, to regulate it, to prevent this from happening. So that's capital controls and exchange controls.
And Germany's blocked some of the more nasty derivatives. But to quantify and boil this down, Webster, I want to talk about the point we've reached and where we're going from here, because from all the evidence I see, the crisis is quickening. And to have the Wall Street Journal reporting on the Federal Reserve last week announcing, the headline. In fact, pull this up, guys, on Google if you can. Inflation is will fix debt problem, Wall Street Journal. And Bernanke saying, inflation is a good idea. We know they've been quietly inflating, but to come out and just say it publicly, what type of signal is that to send? And I want to get into this mortgage situation because that's killing confidence.
Right, we should. Look, just in terms of his QE2, right? Quantitative easing 2, right? Some people think they see QE2 and they see Queen Elizabeth II, right? The ocean liner. But the problem is Bernanke's QE2 is really the Titanic, because you can see what's been happening in the past week, right? The dollar is going down. The dollar is now at a 15-year low compared to the yen. We could go through all the currencies. It's basically the same story across the board. Notice that gold has been hitting these all-time record highs basically every day or every other day. But at the same time, the price of oil is creeping up. The price of copper is going up. Various kinds of food products are going up. So you don't really know at this point, but that could be hyperinflation starting, because that's how hyperinflation comes. Hyperinflation is a foreign exchange event. It's a currency market event. It's not a domestic supply and demand event. And you can see that, from Germany in 1923 and so forth. So the system is always on the brink of the dollar slide getting out of control and becoming unstoppable, and then tremendous tensions and stresses, and the system essentially breaks up. But again, the answer to this stuff is for individual countries, sort of emergency self-defense. It is these things like capital controls and exchange controls. In other words, to shut down the international speculators. Don't let Soros determine the value of your currency. You try to determine it yourself, right? And you got to use your export companies as an important guide in doing that. The other thing is we got to move towards a system of fixed parities, because you can see the Chinese model. Why did the Chinese succeed? It's because they have got a fixed rate now between their currency and the dollar, and they take care of that themselves, so that they can, not only do they get the currency quotation that they want, but they get the certainty, they get the predictability. They know what it's going to be worth 30, 60, 90, 120, 500 days down the road. They know what a renminbi is going to be worth compared to a dollar, and that's a tremendous advantage when you do these things. All right, so currency chaos goes on, currency war, splits, and so forth. Now let's look at what I would call the fraud closure crisis. All right, this is an area where people, I think, can get active. It turns out that as Wall Street was essentially piloting this bubble, right, the housing bubble that Wall Street had created in 05, 06, 07, and even into 08, what they would do is they'd take these mortgages, right? They would deliberately load in mortgages that were going to default. They wanted the mortgages to default because then they could collect on the credit default swaps, the derivatives insurance that they had plastered on top. But they would pack these mortgages, they'd load them and get a large number of insolvent mortgages that they knew would never get paid. They'd package that into a mortgage-backed security, which is already a derivative. And then they'd take the mortgage-backed security and they'd pack that into a collateralized debt obligation. They'd put that maybe into another collateralized debt obligation, making a super CDO or CDO squared. They'd put credit default swaps on top. In the process of doing this, they were in such a hurry that they forgot that there are laws that specify that you've got to, keep a registry in the counties of the United States of who owns what the property